Welcome to the New York City Bar Association podcast. Opinions expressed are those of the speakers and not necessarily of the City Bar.
Hello and welcome to this podcast, hosted by the New York City Bar Association's Presidential Task Force on AI and Digital Technologies. I'm Azish Filabi, co-chair of the Subcommittee on AI in Commerce and Finance. Joining me for today's podcast are other members of the subcommittee. They come from a variety of roles, including in-house legal and operational roles with Nasdaq, Citi, and BNY, as well as law firms of Skadden Arps and Weiss. I'll ask each of them to introduce themselves during the session and share a bit about how their work relates to AI. My role today is to moderate the discussion. I began working on AI law and policy issues back in 2020 as the managing director of the American College McGuire Center for Ethics in Financial Services, which continues to be my role today. I'm also an associate professor of business ethics at the college and hold the Charles Lamont Post Chair of Business Ethics. My work focuses on a variety of topics relating to the financial industry, including trust and financial services and financial regulation. In 2020, we began to look out on the horizon to identify where there might be new ways of doing business that could raise ethical considerations and concerns. We decided to focus on AI ethics because already at that time, the pace of technology was creating new risks for the financial industry and its stakeholders. One of the case studies we did was about how AI is used in underwriting and the ways that the financial industry might consider governing those risks through audits, testing, and certification. We're recording this podcast in mid-March 2025, and approaches to AI regulation in commerce and finance are constantly evolving, and even more so quickly today. And so is the pace of regulatory change and development. So that'll likely continue to require close attention. Today's discussion is going to primarily focus on governance, which includes the policies, procedures, and systems that organizations need to have in place to manage the use and integration of technology in their work. How risk is governed by companies is really important for any area of risk, but for AI and generative AI in particular, it plays a pivotal role because the technology is new, it changes regularly, and how the regulatory infrastructure is evolving is constantly in flux as well. So to kick off the discussion, we'll begin with Stuart Levi, my co-chair of the subcommittee and a partner at the law firm of Skadden Arps. Stuart, thank you for joining the panel. While our primary focus for discussion today is governance, before we get into the various approaches to AI governance, I thought it would be beneficial for our listeners to hear a bit about the current state of AI law and regulation. If you could please provide a high-level overview of what you think listeners should be aware of relating to existing law and regulation of AI, including any recent notable court cases that you think should be of interest for listeners. And if you could please introduce yourself in more detail as well, including your experience relating to AI.
Sure. Thanks, and glad to be on the podcast. So I'm Stu Levy. I'm a partner at Skadden Arps in the IP and Technology Transactions Department and part of our AI practice group. We've been working in the field of AI for a number of years now. Not surprisingly, the work in this sector has picked up considerably over the last 3-4 years, including in large part in the financial services sector. So there's no easy answer about where we are from a regulatory or legal perspective. We're at so many different crossroads. It depends almost like what plane you're looking at this issue from. Here in the United States, we have federal versus state issues in terms of how this will get regulated. There's an overriding issue that has been true for a while as to whether AI should be regulated at the developer level or at the deployer level, the companies that make the models or the companies that use the models or both. And then the real wild card, even before you get to the global stage, is a new Trump administration and a lot of uncertainty as to how the administration is going to view AI. And that's in contrast to some other areas, blockchain and cryptocurrency and digital asset being an example where there's a very decided hands-off regulatory approach. And that's the general thesis of the Trump administration, less regulation. But what that is going to mean in practice with respect to AI is really a big unknown. And I think a lot of that is because no one can quite figure out what regulation should look like, whether a hands-off approach is good for innovation or not, and what that law might look like. One of the first things that Trump did when he got into office was rescind the Biden executive order on AI, which, a lot of people feel was just Trump's reaction to a lot of things that Biden did, which was just to revoke and rescind a lot of things he had done, because the Biden executive order was not particularly antagonistic at all to AI. And Trump has his own executive order on AI, which is not that different. But again, there is this feeling that there's going to be a hands-off approach by the administration. Again, we'll, talk in a minute about what that might look like. Vice President Vance, when he was at the AI Action Summit in Paris a month ago, said that excessive regulation of the AI sector could kill the transformative industry just as it was taking off. That was a little bit of a swipe. Everyone thinks of the EU AI Act, which we'll talk about in a minute. But again, generally, as I said, we're at a crossroads as to where this all might end up. And overriding all of this is a concern that AI is moving very fast, presents a lot of benefits that you do not want to stymie, but also presents a lot of risks that we might not be able to identify. And in certain industries, financial services being a prime example, might present risks that people are not comfortable with. They could really upset the financial system and, could create bias and discrimination. The one thing that'll be interesting to see as we move from, the move from the Biden administration to the Trump administration in terms of AI policy writ large, is one thing the Biden executive order did focus a great deal on was the use of AI in ways that might cause bias and discrimination against people, particularly in the financial service industry, and things like getting denied a loan, let's say, because of the way an algorithm might work. And I think we can anticipate the Trump administration being less focused on those issues. But again, not yet quite clear, what that's all going to mean. So that's sort of the crossroads of where we are. So what does that sort of mean in practice in terms of, what we're seeing, already or seen the last few months? And I'll touch on a couple of key points because it gives you a sense of how regulators and industry groups in the financial services sector are looking at this issue. So just last week, IOSCO, which is the International Organization of Securities Commissioners, which is an international body, it brings together securities regulators from a lot of different countries, and they issued a fairly lengthy report on AI in capital markets. And, they go through some use cases of how financial services stakeholders are using AI, like surveillance, compliance, risk management, algorithmic trading. And they highlight a number of different risks that this might present, ranging from cybersecurity to fraud, bias, transparency, explainability. Do you understand, what your AI model is actually doing when you're making decisions on that? But not a lot in terms of what that should mean from a regulatory perspective. And we're seeing that in a lot of different proclamations by regulators. Maybe a really good example of that is back in December, the Commodity Futures Trading Commission, the CFTC, issued an advisory on AI. And what a lot of it was basically, AI is great, a lot of different ways you can use it, but don't forget that use of AI does not relieve you of your obligations that you otherwise would have. So an example of that is using AI for market surveillance. So the CFTC is very, positive about the usefulness of AI in your market surveillance responsibilities, but, goes out of its way to say, but that does not mean you do not need a compliance staff. You do not need audit trails. You do not need, real-time market monitoring. You actually need people sort of riding herd on how this technology is being used. So again, we're seeing a lot of this balance that I think we're going to see regulators continue to try to play between balancing human activity and human involvement and AI. Same thing, I'll just touch on one more regulator. Also back in December, a lot of agencies and regulators trying to get reports in before year end. The Treasury Department issued their own report on the uses, opportunities, and risks of AI in financial services. And same thing there, they go through They had issued a request for comment, got a number of different comments. They sort of summarized them. And a lot of it is just, look, we need to collaborate. We need to have some certainty. We need to figure out what laws make sense. But again, they go out of their way to say that does not mean that you do not have to comply with your already on the books legal requirements. AI does not eliminate any of those. And you have to fit that in with your current regulatory scheme and risk management frameworks. So that's where we are on the federal level. Let me just talk for a second where we are on the state level, because that's where, as I mentioned at the beginning, I think we're at this interesting crossroads, which is that especially if we see a hands-off approach at the federal level in the next 4 years or so, I do think we're going to see states filling that gap. And we've already seen that in one dramatic respect. There have been a number of different state laws in a lot of different areas, but back in May of last year, Colorado introduced like sort of the first omnibus AI Act, and it deals with algorithmic discrimination, where you're unlawfully treating someone by using AI in a way that's making consequential decisions. And that includes, there's a whole list of them. Some are, things like employment opportunities, healthcare services, but it does also include financial and lending services. So if you're making a decision using AI in the financial services sector, you have to make sure that you're not discriminating against someone based on things like age, ethnicity, proficiency in English, national origin, race, religion, things like that. Virginia has on the books and in front of the governor, which will either get signed or not in the next number of days, a very similar law to Colorado, same idea, no algorithmic discrimination in areas like financial services. So we could end up with this patchwork of state laws, and that'll be difficult for companies to navigate. And then finally, just to take 2 seconds on the international front, the EU, and this has gotten a lot of press, finally enacted last year the EU AI Act. It rolls out over time, but has a number of different transparency requirements, disclosure requirements, and that employs on developers of AI and deployers of AI. What'll be interesting to see is whether the Trump administration tries to pressure the EU to take a light touch on that regulation. They've done that already in a few other EU regulations not related to AI, coming out pretty harshly against them. And it'll be interesting to see how that will play out. But the bottom line and the big takeaway is we are in a very uncertain time as to what regulation might look like in the AI space, where that's going to come from, and how that is deployed and implemented by regulators, particularly in the financial services sector.
Absolutely. Thanks so much, Stu, for that excellent overview. You made a lot of great points, and I think that it really highlights the importance of governance. And much of the conversation we'll be having with the panelists today because of that patchwork approach and the current regulatory emphasis on conforming with existing law. So we'll return to some of those issues later in the conversation. But next, I'd like to bring in Muyiwa Odeniyide into the conversation. He is with Nasdaq, and I'll ask him to introduce himself and his work relating to AI. And I'll also ask, before we get into talking about risks and governance considerations, I thought it would be helpful for the listeners to learn about how financial companies are using and experimenting with AI. So if you could please talk about some of those use cases that you've heard about and experienced yourself, particularly as we think about worker productivity and some of the other possibilities relating to the technology.
Thanks, Azish. So my name is Muyiwa Odeniyide. I'm a director and associate general counsel at Nasdaq, where I co-lead our AI public policy efforts and advise on financial services related regulatory, commercial, and policy issues. And I'm really deeply focused on emerging technology, particularly policy work related to AI and digital assets. As you noted, Aziz, financial firms are using and experimenting with AI technologies. I think we're at this point in time in history where the use of AI, specifically generative AI, is a business imperative. I think that if you're not at least considering how AI could prove additive, you risk being left behind. I think 2023, 2024 was just a lot about experimenting with generative AI adoption with pilot use cases and proof of concepts. But like with 2025 and beyond, I think the mantra is unlocking value. That is unlocking value through implementation and through kind of large scale deployment of AI systems across the enterprise. That being said, in terms of specific AI use cases, I think that they run the gamut. If you're talking about traditional AI, such as algorithms and machine learning systems, I think those use cases have been in the works for decades for many back office operations like compliance management, underwriting, or customer service functions, et cetera. But when we're talking about generative AI applications that are actually using large language models to train on company data and generate value and efficiencies, I think those applications are steadily increasing. I think the promising applications are the ones that help to automate routine tasks so that employees can focus time and energy on more strategic value-added activities. For example, firms are using generative AI tools for coding, for content creation, data analysis, workflow automation in order to really just drive innovation and drive efficiencies. And I think programming or kind of writing code is a huge use case for AI, both inside and outside of financial services, where you're really able to kind of measure the value capture and operational efficiency that the AI tool is providing. I even recall attending an event last week where the CEO of Anthropic had predicted that within 3 to 6 months, AI will be capable of developing 90% of the code that may be required. And within 12 months, be capable of developing 100% of the coding that may be required. And I think apart from coding, other promising use cases for AI technologies, I think, include analytics, financial crime detection, dynamic pricing or forecasting systems, and financial risk management.
Excellent. Thank you so much. Before I go on to the other panelists, I wanted to ask you a follow-up question. As you think about these promising applications, I'm curious from your perspective, what risk would be top of mind? We're going to spend a lot of time talking about governance and risk with the other panelists as well. I wanted to give you an opportunity to share, what do you think about in your role with respect to policy and risk?
Sure. I think one big risk area is hallucinations or when an AI model is kind of confidently generating incorrect or misleading information. I think this is really a significant risk when you're implicating critical decision-making functions or kind of external facing products or services where it's just really high stakes and simply a lot to focus on there. Another, I guess, big risk for me that I would want to highlight is intellectual property risk, where I think it's really proving to be a really important and nuanced risk area, especially for companies that are positioned as both a service provider and a consumer as well, where those companies kind of have to consider how to navigate contractual agreements and ownership concerns involving AI as both a user of client data and as a data provider as well. So I think those are going to be the two big ones that I would highlight. And obviously they're kind of the legal landscape for kind of AI and IP is kind of continues to develop and as the legal tries to kind of catch up with the technologies.
Excellent. Well, thank you so much. Really important points that you've raised, which we'll continue to expand upon in this conversation.
The New York City Bar Association is a dynamic community of over 23,000 legal practitioners. Members shape the future of the legal profession, serve the public, and gain an edge in their careers. To learn more about becoming a member of the City Bar or to join today, visit nycbar.org/join. Save 20% on semi-annual dues when you join. Call Customer Relations at 212-382-6663 and use code POD24.
I'd like to bring Corey Goldstein into the conversation as our next panelist. Corey, thank you for joining the panel today. We has mentioned a few of the risks that I think are top of mind for financial companies. I'm curious from your perspective, how do you advise that companies start to consider AI risk at the current state of AI developments? Given the limited law and regulation relating to AI, There's still privacy law to consider, of course. I'm curious, again, if you could please introduce yourself in terms of your role and how it relates to AI and how you would advise companies relating to risk, really broadly speaking.
Yeah, of course, Azish, and thank you for having me. So as a brief introduction, I'm a senior associate at the law firm Paul Weiss. My practice focuses primarily on data strategy, which entails assisting companies navigating complex data management, privacy, compliance issues, often touching on artificial intelligence and cybersecurity. So we help clients develop data-driven strategies that align with evolving regulations, mitigations, and risks. And as hit on earlier, maximizing the value of our data assets. I think Stuart touched on this as well. It's not just a single type of client, but it's often developers can span any different number of industries, and they can find themselves at any different number of stages of the AI lifecycle, from early stage development to training to deployment to even beyond that. I think going to the question at hand, the limited law and regulations surrounding AI and privacy are really having a significant impact on how businesses are trying to perceive risk and how they're trying to grapple with it. So in the particular space that we're in now, and I think Stuart really hit this one on the head, when law and regulations are sparse, they're unclear, and they're slow to catch up with the rapid pace of technology, it makes it really difficult for companies to grapple with, okay, how risky is what we're doing? What are the potential litigation implications? What are the potential liability implications down the line? Can we be deploying these things? Can we be using them? And how do they fit within our overall risk appetite? And it's not just, I think two of the things which are pretty difficult are the rapid pace of evolution of the legal landscape. So every single day now, it seems like a new regulation, a new piece of guidance, something is coming out which is imposing new requirements, but they're all disparate. And it's somewhat like privacy law was. I think some people would argue it's somewhat like privacy law is now, but I would argue that it's maybe a little bit closer to how privacy law was 20 years ago, of this different patchwork, or I know some colleagues call it a Swiss cheese of different regulations, and it makes it really difficult to try and comply with all of them. But I think one of the more interesting conceptual issues that we see clients deal with often is there are AI-specific regulations, but there are also traditional regulations in traditional areas which overlay on top of AI as well. So we've hit data privacy, we've hit intellectual property, we hit fairness, bias, discrimination. And the question often becomes, are these regulations intending to create new requirements on a new technology, or are they trying to impose sort of more traditional legal regimes onto the new technology and just make it very clear that, these are what the legal requirements have always been, and they also apply to the new technology. Using artificial intelligence won't help you escape what you've always had to do. Or is there something new there? I tend to fall somewhat in the middle, thinking that, yes, they are applying the more traditional legal regimes, but also looking forward, there are specific aspects of AI which frankly have just never existed before. So for example, in some new California bills that are popping up, different transparency and explainability requirements. And those are not necessarily things that we've seen implicated in different earlier types of technologies. I think I've sort of been leading this way, but the difficulty in assessing risk is AI is definitely a new thing, definitely a new technology, but it's also an amalgamation of all of the older, more traditional legal risks, which didn't necessarily have to overlap with each other. And I think the difficulty becomes, if you look at the way, from a governance perspective, organizations have traditionally been set up, data privacy attorneys handle data privacy issues, IP lawyers handle IP issues, internal investigatory and white collar lawyers handle those issues. But AI is not a specific thing, and it doesn't have a specific use case. It's sort of, especially as applied to companies and financial institutions, it's a larger concept. And we're seeing this, we're helping a few different financial institutions sort of grapple with what's an okay deployment use case? What's an okay deployment use case for this specific tool? what's an okay deployment use case for a different one. And if the tool changes, the risks entirely change. If the use case changes, the risk entirely change. If the group that's deploying it changes, everything is different. If it's an internal use case or an external use case, the risks just, you see the different variables here and you see the different number of things that you have to deal with. And before, it was a data privacy issue, the data privacy attorney reviews it, but now you have this sort of all-encompassing technology that requires that everybody be collaborating with each other at all times. So you can't just say, I would like to use this artificial intelligence tool to record meetings. Is that okay? Well, depends what kind of meeting it is. Is the meeting to discuss financial strategies for specific investors that might trigger certain regulations or requirements? Is it for employment decisions or hiring? That's a whole different host of issues. Is it possible that personal information is captured in the recording or summarization of a call? Now you have data privacy back in there again. So it really, I think the one takeaway that we've had for clients and the one thing that we've seen be most helpful is thinking about building sort of long-lasting structures that, as the law changes, and Stuart said, we expect a new law to get signed into place in the next few days, building long-lasting structures that will last beyond any single law that pops up, any single amendment that pops up. And really what we advise and the way that we think is best and frankly, most established for companies to be able to evaluate this is creating structures that are cross-functional. So legal, data science, business operations, and just creating a place that you can review these different use cases, you can evaluate these different use cases, and you can have them be evaluated by the particular expert, because no one person, no one lawyer, no one business person is going to be in a place to evaluate all of the different risks, but it's making sure that it's a collaborative effort to look, around as many corners as possible and see as far down in the future as we possibly can to evaluate them.
You've raised a number of really important points, Corey. I'm fascinated by the specificity of the advice in terms of thinking about the use cases, both the internal impact and the external impacts, and that amalgamation at the level of the collective. As just one follow-up question, as you're thinking about the perceptions of risk and the actual risks among stakeholders, does that thinking change if it's a third-party vendor versus a homegrown AI algorithm?
Oh, almost certainly. I think the two specific areas that we see that change are one in visibility and controllability of the models themselves, but then also, frankly, just in the contractual terms. So, I suppose if you are a downstream SaaS user of somebody else's model, that's a different story. But if you are using a vendor, you might not have insight into how was the model trained? Has it been sufficiently evaluated? Has there been safety testing? Has red teaming been performed? What does that look like? You'll see in specific industry regulations. So like in the insurance industry, you'll often see the regulations state you are responsible for your use of artificial intelligence, even if you're using a vendor. So if that's the case, if you are still responsible for it and you are required to have done all of these things, you then need to make sure that your third-party vendor is doing those things and negotiating the ability, negotiating the access, the auditability into models that, it's frankly a little bit unprecedented to have that level of access to a third-party vendor's model. Negotiating that can get a little bit sticky. And I think the other issue from a risk standpoint that we often advise on and that we often see clients really concerned with are who's actually responsible for the use of the model itself. And that can take a whole host of different issues. But if it's a predicted use of the model, but the model acts in an unpredicted way, who's responsible for that? If the client uses it in a manner that maybe wasn't intended, but it's reasonably foreseeable, is that a vendor issue? Is that a deployer issue? And just really getting into the nitty-gritty of who should actually be responsible for what. But the short answer is yes, third-party vendors very much change the equation.
Absolutely. And it seems like a really broad and separate category of risk as we think about AI. So this sets us up well, I think, for our next panelist, Adam Marchuck, who's with Citi, to join the conversation. Clearly, a lot to think about with respect to governance from the financial services sector's perspective. We know that there's no one-size-fits-all model for AI governance, so we wanted to have a broad conversation in terms of approaches to governance in financial services in particular. I think the models likely vary based on a number of factors, including size, regulatory infrastructure, global footprints. Adam, thank you for joining us for today's panel. Could you please introduce yourself, your role with Citi, and how that intersects with AI? And then share with us some of the priorities that you think are important when integrating AI into existing in-house regulatory frameworks. And some of the best practices that you think have been effective.
Thank you, Azish. I'm very happy to be joining this conversation. My name is Adam Marchuck. I am the managing director and head of legal at Citi for technology, operations, IP, privacy, and cybersecurity. I lead a global team that provides advice across jurisdictions for a number of topics, including cloud strategy and infrastructure, third-party providers and transactions, and emerging technologies such as Gen AI. There are aspects of what others have already discussed that really resonate with me. I'll try to avoid repetition, but generally speaking, I connect with many colleagues across the financial services industry, and I've learned that many firms are on this journey, like specifically how to support and advise our clients on safe use of Gen AI that operates in compliance with changing regulatory landscapes. So when it comes to in-house frameworks and models, to show how to deploy the use of AI or the right governance models and how different firms are managing and executing on the same, there really is no one-size-fits-all approach. What is common is that some of the issues we consider in respect to AI and emerging technologies are not new, but perhaps require us to look at them in updated ways. There are a host of issues that firms like mine are already familiar analyzing, such as, those present in third-party contracts and relationships, information security, privacy, data rights and IP issues, location and jurisdictional concerns, model risk, operational risk, fair lending issues, legal, regulatory, and business concerns that all should be considered for each particular use case. It's clear that these are really not new to most large and medium-sized financial services companies. And these companies already have infrastructure and governance frameworks and guardrails to assess and address the related risks. And they are already designed with cross-functional groups and membership involved. So with the introduction of Gen AI, you should confirm that there are roles for each of the three lines of defense, and that there's an opportunity for the list of contemplated issues and risks to be made transparent, and that we're continuing to assess them and address them in each case. And if so, I believe, we'll all be in a good position. I've observed that financial services companies have been on a journey, really. I've seen firms address the governance framework with different structures, all getting to the same result and desired outcomes, all with the same goals of enabling ethical, compliant use of technologies. For Gen AI, some companies have built all new committees and work streams for governance. Many of them are at the center. And then for others, I've seen them successfully leverage existing committees and frameworks for governance. Some are at the center and some are more fragmented, while others have combined, both approaches. All of these can work. Financial services firms, especially those with a broad footprint, are already used to operating in a highly complex regulatory environment and are prepared for incorporating ongoing reg changes. So it's obviously important to make sure that all the issues are appropriately considered, to go through clear governance processes and review. And I believe that companies are getting used to and educated on the important issues and considerations that Gen AI in particular bring. And as a result, institutions are continuing on their journeys And some, but not all, are going back and partially incorporating Gen AI into their existing governance frameworks if they hadn't before, and leaning less on special purpose committees and work streams. And companies continue to adapt. There really is no one size fits all approach and no single correct approach to incorporating and integrating Gen AI and emerging technologies into governance and existing in-house frameworks.
Absolutely. And that's encouraging to hear about the existing infrastructures and systems being able to be adapted to some of these new challenges. If I could ask one follow-up question in terms of, we hear so often about this need for cross-functional collaboration, and it sounds like from an in-house perspective, that's always been necessary, right? A lot of the legal risk issues and operational risk issues have been cross-functional. I'm curious, as we hear more in the media about the generative AI risk, how should one substantively think about why generative AI is different than the more traditional AI? Again, as we think about these governance best practices and the experimentation with governance that some companies might be doing, I'm curious if you have any nuance around why Gen AI might be different.
Sure. Governance of Gen AI requires additional layers, in my view, than what I'll call classic AI did. There's more need for review of content oversight, output monitoring, and usage specific restrictions and considerations beyond what was typical before. For example, Gen AI includes inherent risks, including, risk of hallucinations or data leakage of sensitive or proprietary data, outputs that can be created that could be considered potentially harmful or include bias, and the difficulty in auditability or traceability in the use of Gen AI that doesn't typically exist in classic AI. So use of Gen AI often includes more safeguards needed. Sometimes I know we talk about with Gen AI, there's this concept of having a human in the loop. And also we spend more time analyzing specific Gen AI use cases, determine the level of risk, not only on the use, but also on the output and where it's going and how it's getting there. So I think with Gen AI, we need to consider that there are guardrails that care for all of these areas in a different way. And it's important not to miss any step and include all the essential legal, compliance, operational, and other cross-functional input from the business and technologies.
Absolutely. And I think that raises some of the concerns that I've been hearing and reading about in terms of, again, that pace of change within the technology, particularly as some of the vendors are updating their own technology, whether or not the more regulated financial firms are learning about it in a timely way, the right time and approach for asking about some of these updates, and then how to integrate that and cascade it into a broader governance infrastructure. So all really important points that you raised. Thank you so much, Adam. I'm next going to bring in Jordan Romanoff from BNY. Jordan, AI developments are moving quickly, and us lawyers, we need to keep up with this pace of change. I've been seeing references recently to AI lawyers. I think I might be an AI lawyer myself, but I'd like to better understand what it means to be an AI lawyer. So I'd love your perspective on AI lawyering. And I don't think it's your title at BNY, but if you could share with us what your title is, what your role is, and how it intersects with AI. But also, what does it mean to be an AI lawyer? Can you describe the day in the life of an AI lawyer from your perspective?
Absolutely. And thank you so much for happening. So my name is Jordan Romanoff. I'm the co-head of legal for intellectual property, technology, and innovation, and the head of our marketing and communications legal team. So you're right. AI does not appear in my title, although intellectual property, technology, innovation, obviously all of those have to do with AI. So the concept of an AI lawyer, didn't exist three years ago. And just like AI, it changes on a daily basis. And most people are not just AI lawyers. Many of us who work on AI matters come into this with intellectual property backgrounds, data backgrounds, privacy backgrounds. as many of the initial legal issues in generative AI are copyright-based, are privacy-based, or data-based. I didn't even think of myself as a, quote unquote AI lawyer until someone else referred to me that way on a call. And I looked around on the virtual call and went, wait, who are they talking? Oh, they're talking about me. Great. Okay, cool. Another thing to add to the resume, I suppose. But you mentioned, day in the life of an AI lawyer. It can include use case reviews, which I can talk a bit more about in depth in a moment, client or vendor negotiations, open source reviews. And we actually haven't really talked about open source much on this call, but a lot of the legal issues in AI are still coming out of open source since certain model providers have made those models available under open source licenses. Analyzing pending litigation, legislation, or regulations, like what Stuart was discussing earlier, that could have an impact on our initiatives. Educating other lawyers on the potential benefits of AI. We think that legal actually has a great opportunity to innovate using AI, and it can be an instrument for change within larger corporations. Working to improve and streamline governance models. And finally, engaging with marketing and business teams to ensure how we're talking about AI externally is accurate, and that companies are, of course, not, AI washing. And all of that is, without trying to or having to abandon the roles and duties we all had before November of 2023 when ChatGPT was released.
Absolutely. So interdisciplinary, constantly evolving, are some of my takeaways in terms of AI lawyering. As you think about the conversation we've been having with respect to governance, I'm curious, as a follow-up question, what role do you think this interdisciplinary approach has in AI governance, particularly as you think about it from a skill set perspective? Are there new skill sets that are required for thinking about this new approach to AI, both from a legal perspective and a governance perspective? How would you reflect on that skill set aspect?
Absolutely. So a lot of the questions or potential issues that come up in the context of AI governance are legal in nature, which is why legal has to be a part of any governance model. I think it's the one perhaps consistent that we would all agree upon, other than, the risk and compliance. And there are questions related to intellectual property, data, privacy, and cyber, to, just name a few. It's certainly cross-functional, as Adam mentioned. But lawyers that are spending a lot of their time on AI should be engaged both in creating the governance framework and also in the actual reviews of the initiatives with their risk compliance, data ethics colleagues. It can't just be one or the other. And while these AI review sessions can be daunting, time-consuming, perhaps happening even on a daily basis, it's through that active participation in reviewing these use cases that we can confirm that we're adhering to applicable laws, regulations, our own internal policies and guardrails, even at the POC stage, which allows us to innovate responsibly, but at scale. And by taking on that active role, it's what allows us to do both at the same time and make sure we're moving our organizations forward. In terms of skill sets, participating in these review forums is a bit like issue spotting on steroids, going back to, law school days, or even perhaps a bit like a deposition. You have to ask questions, engage with the use case, the presenters of the use case, to get at the heart of the potential legal risks and accurately understand the technologies. You have to be willing to dive into the technology and think like an engineer, which is perhaps not something many of us lawyers are used to doing, unless you come from a patent background, perhaps. So it's certainly been fun. There's a lot of language that we've all learned, terms, phrases. It feels like I went back and got another undergrad degree in computer science most days. But we're having fun while doing it. And again, trying to make sure that we're supporting the organization.
Excellent. Well, thank you for that. It definitely seems like a passion for lifelong learning is a core part of being an AI lawyer.
Absolutely.
But also the core skill sets and education of any legal role certainly are an important consideration. So thank you, Jordan. I'm going to bring Stu back into the conversation. We have covered a lot of ground in this discussion so far, and I wanted to talk a bit about innovation and experimentation, Stu, and get your perspectives on thinking about certainly the AI risks and these governance frameworks and anything that you might want to add with respect to governance best practices that you've seen. But also as we think about how do we best support innovation in an organization while balancing this risk? I think, part of what Jordan was touching upon is that Actually, the lawyers have a big role to play in making sure that the innovation is onboarded effectively within any organization. So clearly there's a balance that's needed as part of these processes, and would love your perspective on how you're seeing that evolve.
So it's a really excellent question. I think the point that Adam made is an important one about how we are seeing a mix of companies that have AI governance committees and are sticking with that, and clients of ours who are realizing that they can start to fit this within other risk committees they have, or different review processes they have, and don't need something special. I'm reminded, I've been a tech lawyer a long time, that, there was a time when you had, the .com lawyer, and then, you separate that out, and then it started to just fold into everything else because, okay, there's maybe a unique issue or two, but nothing that you needed something, so specific for. And I think with the speed with which AI is moving, we'll get to that point even faster. But I do think the challenge, for any lawyer, whether you're at a law firm or in-house counsel today, is how do you advise clients who see potentially real either revenue generation opportunities, cost reduction opportunities, and want to roll out this technology in an area that's fairly nascent, where the risks are still, unfolding, in real time. And I think, the right answer, and I think sort of the best practice, best because it's a relative best practice, maybe not the ideal thing to do, but what you can do is, as a lawyer who's practicing in this space and who's being asked to advise on AI issues, is to be aware of what the different risks are out there, staying on top of the technology as it's evolving, being, familiar with what's going on, and being to highlight the risks for the business team so that they're making an educated assessment of what, what they are. And, they're going to make those calls like they make them in every other area, but those should be educated risk decisions, and including, and maybe this is what makes it, I guess, in some ways, the most challenging, is the risk being the unknown a little bit. In some areas where we advise clients, as lawyers, again, whether, at a company or outside, what the risk is. The risk is very definitive, and you can then make the decision. Here, some of the risk is going to be that there's an unknown piece to this in terms of where the regulation might go, how the technology might evolve in a way that's not what we expected. But again, I think the bottom line is really being able to lay out what the landscape looks like for the decision makers, and helping them think through what those means and to balance those risks. And it's not going to be risk-free, but the benefits here, in many cases, we're already seeing, are going to outweigh what those risks are.
Excellent. Well, I think that's solid advice for all lawyers, but also for AI lawyers. Thank you all for joining us today on this panel. Thank you for the listeners for joining us with this podcast. We hope that you have been able to have a lot of takeaways with respect to how to think about AI risk within your organization, some of the governance best practices, and to reach out to us through the Task Force on AI and Digital Technologies with the New York City Bar Association. And we're the subcommittee on AI in Commerce and Finance. We look forward to engaging with the legal community relating to these topics. And if you have any suggestions for us on future areas to cover, feel free to reach out, and we'd love to be engaged. Thank you again.
Thank you for listening to this episode of the New York City Bar Association podcast. Opinions expressed are those of the speakers and not necessarily of the City Bar. If you enjoyed this podcast, please like and subscribe wherever you listen. Find more City Bar podcasts on Apple, Spotify, YouTube Music, iHeart, or at our website at www.nycbar.org/podcasts. Be sure to check out This Lawyer's Life, a professional development podcast where we talk with lawyers about seizing opportunities, learning lessons the hard way, and about what makes them tick. And don't miss Building Belonging, a podcast that embraces authentic conversations about DEIB solutions by amplifying the most marginalized voices in the legal industry and exploring spaces others dare not. This podcast was produced and edited by Eli Cohen.